Germany entered the 1930s in a state of deep economic collapse. The aftermath of World War I, the reparations mandated by the Treaty of Versailles, and the catastrophic hyperinflation of 1923 had shattered public confidence in the nation's financial system. Savings evaporated overnight, businesses failed in massive numbers, and ordinary citizens found themselves unable to buy even basic necessities. Although a period of relative stability followed under the Dawes Plan and later the Young Plan, this fragile recovery was abruptly destroyed by the global shock of the Great Depression in 1929. International loans dried up, industrial production plunged, and by the time Adolf Hitler came to power in 1933, approximately 6 million Germans were unemployed. Factories sat idle, government revenues collapsed, and the state teetered on the edge of insolvency. Into this environment came the Nazi regime's ambitious promise to rebuild the military, restore national pride, and create economic revival through rearmament. But rearmament on the scale Hitler envisioned required enormous capital. Capital the German government did not have and could not openly borrow without violating the restrictions of the Versailles Treaty. The challenge was therefore twofold: financing a vast military expansion while simultaneously concealing it from foreign powers. Solving this challenge required an unconventional financial strategy, one that would rely not on the visible institutions of the state, but on hidden mechanisms designed to operate outside normal accounting systems. Central to this strategy was a key figure, Hjalmar Schacht, the architect of Germany's covert economic revival. Hjalmar Schacht, a respected economist and banker who had already played a major role in stabilizing Germany's currency after the hyperinflation of 1923, returned to prominence when the Nazi regime seized power. Although not a member of the Nazi Party, Schacht accepted the post of president of the Reichsbank and later became Minister of Economics. He believed that Germany needed rapid economic revival and saw rearmament as a means of reducing unemployment and restoring industrial capacity. But because Germany lacked both capital and credibility on the international market, Schacht understood that normal borrowing was impossible. The solution, in his view, was a system that would finance military expansion without appearing as government debt and without triggering international scrutiny. Schacht's core insight was that the German economy had massive unused capacity. Factories were idle not because they lacked workers or machines, but because there was no money to pay for production. If Germany could create demand, specifically demand for military equipment, it could revive industry and reduce unemployment. However, openly funding such demand through state spending would immediately appear in the government's budget and would reveal the scale of rearmament. Moreover, it would raise questions inside Germany about how the state could afford such expenditures. To overcome this, Schacht helped engineer an off-the-books financing mechanism that would operate through a fictitious corporation, thereby disguising the flow of money and keeping enormous liabilities hidden from both domestic and foreign observers. This strategy required a financial instrument that could circulate like money, function like credit, and yet avoid classification as state-backed debt. It needed to be trusted by industry, but invisible to those watching Germany's financial accounts. This challenge gave rise to one of the most unusual economic tools of the 20th century, the MEFO Bill. Through these bills, Schacht created a parallel financial system, a shadow banking structure, designed not only to rearm Germany, but to keep its rearmament secret. This system would transform the country's moribund industrial base into a powerful military machine, while simultaneously pushing the German economy into a dangerous dependence on continued expansion and future conquest to service the hidden debt accumulating beneath the surface. To mask the scale of Germany's rearmament, Schacht helped establish a fictitious company in 1934, the Metallurgische Forschungsgesellschaft, or MEFO for short. On paper, MEFO appeared to be a private industrial research firm, but in reality, it had no employees, no factories, and no independent operations. Its sole purpose was to serve as a financial intermediary, an entity that could issue promissory notes, later known as MEFO Bills, which German industries would accept as payment for the weapons, vehicles, and equipment the government wanted to procure. By channeling payments through this shell company, the government could claim that these transactions were private sector business activities rather than state expenditures, thereby preventing them from appearing in official budgets. The MEFO bill itself was a form of short-term credit, typically with a maturity of 6 months, although they were routinely extended for years. They promised payment of a specific sum in Reichsmarks, and because they carried an interest rate, they provided an incentive for industry to hold them. Most importantly, Germany's central bank, the Reichsbank, agreed to convert MEFO bills into regular currency upon request. This guarantee effectively made the bills as reliable as government bonds without officially being government bonds. For arms manufacturers and heavy industry, the system was both practical and appealing. Instead of receiving immediate payment in cash, they received MEFO bills, which they could either keep for interest or discount at banks whenever they needed liquidity. The result was an enormous flow of credit into the military sector without any corresponding entry in the state's financial accounts. This arrangement also allowed the Nazi regime to bypass the restrictions of the Treaty of Versailles, which prohibited large-scale rearmament. Because MEFO bills were not listed as government spending, they concealed the rapid expansion of the German armaments industry. Factories that had been empty during the Depression began running at full capacity. New jobs were created, and unemployment fell dramatically. From the outside, Germany appeared to be recovering through sound economic management and public works projects, such as the construction of the Autobahn. In reality, a substantial portion of this recovery was financed through hidden debt, funneled through a company that existed only on paper. As MEFO bills circulated throughout the economy, they created a parallel monetary system. By 1938, more than 12 billion Reichsmarks worth of MEFO bills had been issued, an enormous sum that far exceeded the state's public budget. This volume of credit pushed the economy into overdrive, creating artificial demand for steel, coal, machinery, and labor. Industrialists were encouraged by guaranteed orders and easy credit, while the government enjoyed the illusion of a healthy economy without the visible burden of debt. Yet beneath this apparent prosperity lay a growing financial time bomb. Every MEFO bill, no matter how often it was extended, eventually had to be paid, and by the late 1930s, as more bills approached maturity, the Reichsbank began to face a stark reality. Germany did not have the reserves or revenue to redeem the enormous mountain of concealed debt it had created. This hidden fragility meant that the German economy, despite its outward strength, was dangerously exposed. It relied on continuous military expansion to sustain itself. Factories built for war production could not simply revert to peaceful goods without massive disruption. Workers employed in arms industries depended on continued government orders, and the financial system, propped up by MEFO bills, required ever-increasing levels of production to avoid collapse. By 1938 and 1939, the Nazi leadership understood that time was running out. The credit system that had powered Germany's rise would soon demand repayment the state could not provide. The regime's solution to this problem was not financial reform, but territorial expansion, an effort to seize the resources, wealth, and strategic advantages necessary to keep the system alive a little longer. By the late 1930s, Germany's rearmament program had reached a scale that could no longer be sustained by domestic resources alone. Although MEFO bills had successfully fueled rapid industrial revival, they did not create new wealth, they merely deferred payment. The German economy, now deeply militarized, depended on a constant influx of raw materials such as iron ore, oil, and rubber. Yet Germany lacked sufficient natural resources to support both its civilian needs and its growing war machine. This scarcity intensified the pressure created by the hidden MEFO debt, forming a dangerous cycle. The military needed to grow to justify the credit system, but the credit system could only survive if Germany secured new sources of income and materials from outside its borders. In this context, territorial expansion was not merely ideological, it became intertwined with the economic survival of the Nazi regime. The annexation of Austria in 1938 provided immediate financial relief. Austria's gold reserves, foreign currency, and industrial assets were absorbed into the German economy, helping to stabilize the Reichsbank's declining reserves. The subsequent dismantling of Czechoslovakia brought further economic gains. Access to Skoda armaments factories, coal deposits, and substantial foreign currency holdings. These acquisitions allowed the regime to postpone the day of reckoning for the MEFO Bills, but they did not resolve the underlying structural problem. Germany was spending far more than it earned, and the concealed debt continued to accumulate. Meanwhile, Hitler's territorial ambitions were framed publicly as efforts to unite ethnic Germans and overturn the injustices of Versailles. Internally, however, Nazi leaders understood that expansion also served a crucial financial purpose. Rearmament could not slow down without triggering widespread unemployment, industrial collapse, and exposure of the hidden debt system. Thus, the economic logic of the regime aligned with its ideological objectives, creating a unified drive toward aggression. The economy had been reshaped around military production to such an extent that peace itself threatened stability. Industries that produced weapons could not simply switch to consumer goods without major losses, and the government lacked the funds to support such a transition. By mid-1939, the Reichsbank faced growing pressure from MEFO bills reaching maturity. Industrial firms began seeking redemption, demanding payment in cash or standard bonds. Yet the state treasury was nearly exhausted, and foreign exchange reserves were at critically low levels. The choice facing Nazi leadership was stark: default on the hidden debt and risk economic collapse, or pursue further territorial expansion to seize assets and resources that could sustain the system. This dilemma formed a crucial but often overlooked economic backdrop to the political and military decisions of 19. The invasion of Poland, though driven by ideological aims and long-held strategic objectives, also carried an economic dimension. The regime believed that acquiring territory and plundered resources could buy time to keep the MEFO system from unraveling, and time to maintain the illusion of financial stability for a little longer. By 1939, the hidden financial machinery that had powered Germany's rearmament reached its critical limit. The system had worked only as long as industrial firms were willing to hold MEFO bills instead of demanding cash redemption. But confidence in the bills began to erode. Manufacturers, aware that the bills were backed by nothing more than government promises, started cashing them in at the Reichsbank in growing numbers. This created a liquidity crisis. Germany's gold and foreign currency reserves, already drained by years of importing weapons-related materials, dropped to dangerously low levels. Behind closed doors, Schacht himself warned that the state was heading toward insolvency. He believed that the MEFO structure, once a clever emergency measure, had been stretched far beyond its safe limits, yet the Nazi leadership was unwilling to slow the pace of rearmament. The economy was now too deeply militarized, and cutting military spending would have caused mass layoffs and exposed the government's hidden deficits. Thousands of businesses had reorganized their operations around war production. Entire regions depended on military contracts for employment and income. To slow production would risk not only recession, but also political turmoil. For Hitler, the strategic and ideological momentum of expansion had become inseparable from the economic system he had created. He dismissed Schacht's warnings, effectively ending their collaboration, and moved forward with preparations for war. Internally, Nazi economic planners recognized that Germany lacked the raw materials needed for a prolonged conflict. The nation was particularly vulnerable in oil. Domestic production was negligible, and synthetic fuel programs could not fully meet military requirements. Steel and iron ore supplies were also insufficient for long-term expansion. The seizure of Austrian and Czech resources had helped, but not enough. When decision-makers examined Germany's strategic position, they concluded that the only path to sustaining the military, indeed the only way to avoid collapse, was continued conquest. Each new territory promised resources, factories, food supplies, and foreign reserves that could temporarily compensate for the underlying structural weaknesses of the economy. The invasion of Poland in September 1939 thus occurred at the intersection of ideology, geopolitics, and economic necessity. While Nazi racial and expansionist goals drove much of the policy, the hidden financial crisis created by MEFO Bills added urgency. By seizing Polish assets, farms, labor, and infrastructure, the Nazi regime hoped to relieve shortages and buy additional time. Yet even this conquest, followed by the absorption of Western European territories in 1940, could not fundamentally resolve Germany's economic limitations. The initial financial windfalls from looting, forced labor, and resource extraction masked the deeper problems but did not eliminate them. As the war expanded into the Soviet Union in 1941, Germany entered a conflict of unprecedented scale, one that demanded far more resources than the regime could ever sustainably procure. The vast territories of the East were seen not only as ideological battlegrounds, but as economic prizes, rich in grain, oil, and raw materials. Nazi planners imagined transforming these regions into a colonial empire that would feed the German war machine indefinitely. But the realities of military resistance, logistical challenges, and the brutality of occupation undermined these ambitions. Instead of stabilizing the economy, the invasion of the Soviet Union accelerated the depletion of German resources and exposed the inherent unsustainability of the MEFO-driven rearmament model. By 1943, the economic contradictions that had been concealed during the pre-war years fully resurfaced. Germany faced critical shortages of fuel, steel, and manpower. The Allies' strategic bombing campaign further strained the industrial system. The initial illusion of strength built on creative financial engineering and hidden debt gave way to the harsh reality of material scarcity. The MEFO system, long since abandoned and absorbed into war spending, had left behind an economy unable to support the demands of total war. In the end, the MEFO bills represented more than a clever financial trick. They revealed how the Nazi regime built its power on unsustainable foundations, secret debt, resource exploitation, and the coerced labor of millions across Europe. What appeared as a miraculous economic recovery in the 1930s was, beneath the surface, a fragile structure dependent on aggression and plunder. When conquest could no longer keep pace with the demands of the system, collapse became inevitable. Germany's military expansion, which had once seemed unstoppable, ultimately found its limits in the very economic weaknesses that the MEFO scheme had been designed to hide. Germany's rapid transformation from a bankrupt nation in 1933 to a formidable military power by 1939 was not the result of financial strength, economic stability, or efficient governance. Instead, it was built upon a concealed and ultimately unsustainable financial structure. The MEFO bill system, engineered by Hjalmar Schacht, provided the illusion of prosperity through massive off-the-books borrowing. It revived industry, reduced unemployment, and powered rearmament, while hiding the true cost from both German citizens and foreign observers. Behind the facade of recovery stood an economy deeply dependent on war. Factories thrived only as long as military orders continued. Employment remained high only because the state poured resources into arms production. And the financial system stayed afloat only because MEFO bills postponed payment, pushing an ever-growing mountain of debt into the future. This meant that peace, not war, was the real threat to the Nazi regime's economic survival. Any slowdown in military spending would have exposed the hidden liabilities, collapsed key industries, and revealed the fragility of the system Schacht helped create. Territorial expansion became the regime's answer to its economic contradictions. Each annexation and invasion provided temporary relief through plundered resources, foreign currency, labor, and industrial assets. Austria, Czechoslovakia, Poland, and later parts of Western Europe were drawn into this extractive machine. Yet these gains were stopgaps, not solutions. They masked the reality that Germany lacked the natural resources and financial stability needed to sustain prolonged rearmament or a drawn-out conflict. When the regime turned eastward toward the Soviet Union, imagining that conquest would finally secure the resources necessary for long-term dominance, it revealed the desperation embedded in its economic strategy. The war of annihilation that followed exposed the limits of both ideology and the financial illusions that had powered early successes. By the middle years of World War II, the weaknesses long concealed by MEFO bills became impossible to hide. Material shortages, overstretched supply lines, and strategic miscalculations eroded Germany's military capacity. The temporary wealth acquired through plunder could not withstand the industrial power of the Allied nations. The economy that had seemed revitalized in the 1930s unraveled under the pressures of total war. In the end, the story of how Hitler funded rearmament is not only an account of financial manipulation, but a reminder of how economic systems built on secrecy, coercion, and expansion inevitably collapse. The Nazi regime's economic revival was neither miraculous nor sustainable. It was a structure propped up by hidden debt, supported by the exploitation of conquered peoples, and driven forward by the relentless pursuit of war. Once the regime could no longer expand, its economic foundation crumbled, revealing that its apparent strength was an illusion from the very beginning.